Welcome. In this video, can CRO increase 550% and see a new ATH? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
First of all, when we talk about such an ascending trend line, in terms of technical analysis, what we are actually seeing is the clearest indication of buyers' willingness to constantly push the price higher, essentially the most concrete sign of bullish momentum. An ascending trend line is usually drawn by connecting the higher lows, and it appears when each new low remains above the previous one. This tells us a lot about the underlying market structure, because although sellers may manage to push the price down to a certain level each time, the strength of buyers outweighs them and lifts the price from a higher point again. That's why ascending trend lines become a symbol of strong market psychology and investor confidence. The fact that price wants to approach this trend line is also a common occurrence in technical analysis, because the trend line acts as both a reassuring support level in the eyes of investors and a reference point that price seeks while searching for balance. In such a case, the price approaching the trend line can be explained as a natural result of the market searching for direction. Markets never move in a straight line. Both uptrends and downtrends develop in waves. This wave-like nature constantly pulls the price back to a certain trend line. Because investors follow this line, they place buy orders around these levels, and so the price finds support at the trend line again. As price gets closer to it, a strong psychological effect draws market attention. Buyers see this level as an opportunity, while sellers increase selling pressure to test it. The battle between these two forces determines whether the price will touch the trend line or not. When we evaluate this process positively, the price wanting to touch the trend line is actually a very important step for the healthy continuation of the uptrend. Because as the market climbs upward, it needs to pause, so to speak, take a breath, and confirm support levels. If the price approaches this trend line and then bounces back upward, it proves just how strong and reliable the uptrend is. One of the fundamental principles technical analysis teaches us is that confirming support and resistance levels is crucial for the sustainability of a trend. That's why the possibility of price approaching the trend line is often seen as a positive development by investors. From another perspective, the price moving toward the trend line also aligns with the strategies of big players, namely institutional investors. These types of players usually prefer to buy at lows. Buying at the very top of an uptrend is risky for them, therefore they want to enter at more reasonable levels, close to the trend line. This sets the stage for the price to gradually move toward the trend line. The buying demand of large players at these levels helps the price bounce strongly from there. This increases the confidence of retail investors and strengthens the continuation of the uptrend. The price approaching the trend line can also be interpreted as a kind of energy gathering process, because as the price gets closer, market volume, investor psychology, and volatility are closely monitored. If the price touches the trend line and receives a strong buying response, this fuels acceleration in the uptrend. Often, such touches mark the starting point of the next big upward move. In technical analysis, healthy pullbacks to a trend line can prepare the ground for long-term rallies. Especially on higher time frames, daily or weekly, the price touching the trend line and gaining strength there reinforces the bullish psychology in the market. On the other hand, the price wanting to approach this line is seen as a kind of test in the eyes of investors, because everyone is watching that line. If the price approaches it but fails to hold, the strength of the uptrend begins to be questioned. But if we look from a positive angle, the price moving toward the line and finding strong buying there confirms the continuation of the trend. This confirmation strengthens not only the confidence of technical traders, but also that of fundamental analysts. Because when market makers and long-term investors see that the price is rising within a certain structure, they're more willing to maintain their positions. By its very nature, every time the price comes close to an ascending trend line, a new window of opportunity opens, because these levels are where buyers step in more strongly. If the price finds support there and rises again, previous highs can be surpassed easily. This creates a domino effect in the market. New investors enter, existing investors increase their positions, and the uptrend accelerates. That's why the price approaching the trend line is often considered a positive development that benefits investors. In addition, the price wanting to approach the trend line is also a reflection of the market's need to rebalance. Continuously moving upward goes against the nature of markets. A healthy uptrend is always supported by certain corrections and pullbacks. When these pullbacks occur toward the trend line, they don't cause panic in the market. On the contrary, they increase confidence, because investors see that the price is moving forward in an orderly way. Irregular, overly steep rises are usually unsustainable and often end in sharp declines. But markets that confirm their uptrend by pulling back to the trend line tend to deliver much more reliable and lasting moves in the long run.
Putting all of this together, the price wanting to approach the ascending trendline can actually be seen as a signal of a big opportunity, because this movement both refreshes buyer confidence and allows the upturn to continue in a healthy way. Every support taken from the trendline prepares the price to reach much higher levels in the next stage. In other words, this process is like a prelude to a major rally. If the price approaches this trendline and then bounces back strongly, it can open the doors to a very profitable period for both short-term traders and long-term investors. In conclusion, the price wanting to approach the ascending trendline should be interpreted from a technical analysis perspective as both healthy and positive, because this process confirms the strength of the uptrend, strengthens market psychology, gives confidence to investors, and increases the probability of a future rally. Investors should be cautious during this process, observe how the price reacts to the line, and be ready to take advantage of potential opportunities. If the price tests this line and reverses upward with strong buying, further acceleration toward higher levels becomes almost inevitable. That's why the price approaching the trend line is one of the most promising signals for the sustainability of the market's uptrend. But we can't make decisions based on trend lines alone, so let's take a look at some other metrics as well. Stay tuned.
The fact that a bearish order block has formed in the current price region is an extremely important detail for understanding the technical structure of the markets, because order blocks are not only areas where buy or sell orders are concentrated, but also signals of where major players have entered the market in the past. The structure we call a bearish order block represents the area where selling pressure previously intensified and the price sharply reversed downward. Therefore, if the price is currently located right in the middle of this block or slightly above it, what traders closely watch is whether this level can be broken upward. Because the accepted idea in technical analysis is this: if the price can break through this area where sellers once dominated, it means sellers' power has weakened and buyers' pressure has taken the lead. Such a breakout often leads to upward momentum in the trend and serves as a strong confirmation for the continuation of the move. Bearish order blocks are like the traces left behind by large funds or institutional investors. They executed their high-volume sales in these zones and pushed the price strongly downward. That's why many investors believe that when these areas are retested, selling pressure could reappear. However, if the price manages to move above this area, the situation completely reverses. Because the sellers waiting there are broken, it means buyers can now continue to push the price upward without resistance. Especially after liquidity grabs, when price breaks through these blocks, it opens the way for further upside. In other words, the price can gain momentum as if breaking free from its chains. It must be remembered that as long as bearish order blocks are not broken, upward moves will always be limited. Even if the price attempts to rise, the clustered orders there act like a wall against it. But when that wall is shattered, the path ahead is clear. That's why traders often shape their strategies based on whether or not the price can break these regions. If the breakout occurs, stop orders are triggered, new buyers join in, selling pressure dissolves, and the price can continue its upward move much more strongly. As a result, the continuation of a rally-like surge can be expected. The presence of a bearish order block at the current price level also clearly reflects market psychology. Most investors see this area as risky because selling pressure previously turned the price around here. But the recurring nature of the market is this: levels where price once reversed get retested, and if a different outcome occurs this time, the trend direction becomes clear. That's why the breaking of a bearish order block is so important. Because the breakout here is not just about crossing a technical line, it's also a sign that the balance of power in the market has shifted. It sends a clear message that buyers have won this battle. After such a breakout, the move toward higher levels is not only a theoretical possibility, but also a fact proven by past examples. Many times it has been observed that after breaking a critical bearish order block, the price shoots upward as if unleashed. Because while resistance from sellers was expected at that level, on the contrary, it becomes clear that buyers' pressure is much stronger, creating a psychological domino effect. Buyers gain confidence, new investors enter the market, and short-term sellers are forced to close their positions. All of these factors work together to push the price much higher. Breaking order blocks also doesn't always happen with a single candle. Usually price tests the region several times, approaches it, experiences small pullbacks, then tries again. This process is actually a phase where buyers' patience and strength are tested. But when a breakout finally happens, its impact is much stronger, because it shows that sellers tried repeatedly to defend the area but ultimately failed. This sends a strong message to market participants. This level is now behind us, and the way upward is clear. The breaking of a bearish order block is not only a technical milestone, but also a psychological turning point, because most investors closely follow these areas. Especially traders who know how important past reversal levels are on charts place new buy orders when they see such a breakout. So the continuation of the move after the breakout is not only the result of technical structure, but also of mass psychology. Since everyone sees the same thing, they act in the same direction, and the collective movement's strength turns the price into a rally. If the price breaks the bearish order block at the current level, the ensuing surge may mark not only a short-term continuation, but also the beginning of a medium to long-term uptrend. Because such a breakout is generally considered confirmation of trend reversal. If an area where declines once started has now been surpassed, it means the downtrend has ended and the uptrend has begun. This paints a reassuring picture for investors. As confidence grows, new money enters the market, and that money pushes the price even higher.
The fact that the price is moving within an ascending channel presents a very strong structure from a technical analysis perspective, and is one that should be closely monitored. Ascending channels generally indicate that the price is progressing by forming higher lows and higher highs in an orderly manner. Within this structure, the middle band, or the channel's average trend line, holds particular importance. This middle band reflects both the short-term balance of the price and the critical thresholds in the power struggle between buyers and sellers. If the price moves above this middle band and sustains a breakout, it is considered a highly positive signal for investors. Staying above the middle band indicates that the price now wants to reach higher levels, making the upper band of the ascending channel a natural target. At this point, moving toward the upper band can create an approximate 550% potential increase. Such a significant upside potential naturally could lead to a new all-time high, ATH. When this scenario occurs, it can be said that the price is not only moving within the channel, but also that the upward trend is accelerating. In technical analysis, ascending channels are often one of the strongest indicators of a bull market. Investors begin buying with greater enthusiasm once the middle band is broken. This results in both an increase in volume and a psychological effect that attracts more buyers to the market. The price gains momentum in this manner, moving step by step toward the upper band. Reaching the upper band further increases market participants' confidence and sets the stage for a new record high. It's important to note that breaking the middle band is not just a short-term spike, it is a lasting signal indicating that the long-term trend has strengthened. Reaching the upper band confirms the current momentum in the market even more strongly. Technically, a 550% increase represents an extraordinary performance. Such gains typically attract institutional investors and also lead to heavy participation from individual investors. As a result, the market creates a domino effect. Each new investor entry pushes the price even higher, amplifying the upward trend. Consequently, it becomes almost inevitable for the price to reach a new all-time high. Achieving an ATH signals that one of the most significant psychological barriers has been broken, as investors often see the previous peak as a selling point or a strong resistance area. Once this level is broken, a new historical gap opens ahead, greatly expanding potential gains. The psychology of the market during the rise from the middle band to the upper band is also very important. Investors tend to act more boldly and take long-term positions in such periods. A 550% potential increase is not just a short-term opportunity, it represents a structure promising significant long-term gains. Especially technical analysis-driven investors see strong buy signals once the middle band is broken. Following these signals, the price moving toward the upper band becomes a highly probable expectation rather than just a possibility. This expectation directly influences market participants' behavior. Selling pressure decreases, buying increases, and the price's rise accelerates. This 550% potential increase also indicates that the market has structurally strengthened. Such a significant rise requires both an increased liquidity and a solidified confidence environment. Breaking the middle band is the clearest signal of this confidence. The upward breakout tells investors that the likelihood of a downtrend is now very low and that the uptrend continues more strongly. This message encourages investors to increase positions and develop longer-term strategies. Consequently, the price not only reaches the upper band, but also sets a new historical record, fundamentally changing the overall market trend. Setting a new all-time high is one of the strongest trend confirmations in technical analysis because it represents a level the price has never reached before. This is a turning point for the market. Investors believe that the price can reach much higher levels after an ATH, which opens the door for further buying. In other words, the process that begins with the middle band breakout and continues toward the upper band is not only a technical signal, but also a factor that completely changes market psychology. The market enters a bull trend with almost no obstacles to the upside. Such strong expectations of a rise also lead to broader adoption by market participants. Investors gain confidence through positive media coverage and increased interest on social platforms. The process that begins with the middle band breakout creates a chain reaction. Each new investor generates a new wave, accelerating the upward movement. A 550% potential increase provides confidence not only technically, but also fundamentally, as it supports the idea that the project or asset could gain significantly more value in the future. In conclusion, breaking the middle band of an ascending channel, the price moving toward the upper band, and realizing a 550% increase present an extremely positive outlook for investors. This scenario benefits not only short-term but also long-term investors. Setting a new all-time high signals the beginning of a completely new phase in the market. During this period, investors achieve higher gains and gain confidence in the market. As the upward trend strengthens, the market's future appears brighter. Therefore, the process that begins with breaking the middle band, continues to the upper band, and reaches a new all-time high should be considered one of the strongest bullish scenarios in the market.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.